Hi there, welcome back to the session to help you avoid FOMO and panic. And here we're going to talk about high-speed L1s, including Solana, Near, and SUI. And I'll cover their Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. Remember, the Substack dashboards that covers both broad market as well as crypto market is available for free at SLX. Go check it out. The very first chart, weekly, of Solana. Solana is at the early stage of accumulation cycle. So we have been at this stage for over 8 weeks already. We are actually in the 9th week. Okay, you see, starting from early February, we have been in this range. And one interesting thing over here is that even though this distribution cycle of Solana looks very different compared to that back in 2021-22, the way that it is now coming to this level, it's kind of similar. Okay, look at this. Just focus on this last link over here. Okay, here we are seeing from the top, it has the first mini bounce from the top, mini bounce, and then the second run down, and then it has this bit of sideways a little at around the light blue key level here, 138, and then it dropped to this purple orange range, 75 to 101. Okay, we are currently in the same range. Back then, in 2022, there was quite a big rally before it fully drops to the accumulation range. This is not a must to happen. Okay, so be careful. Even if you see something like this, if you're trying to ride a wave, don't leave your order open. Yet because if it drops back, it is very quick. You see there's like 10 weeks or even more of price drop from that point. So we are kind of similar between orange and purple. We haven't seen this kind of thing yet, and it may not happen. If it happens, protect yourself while you are trying to catch that rally. So if Solana is really going to go through the entire accumulation cycle, what typically would happen is not the same every time, as you can see in other sessions in other charts that I've shown you. Sometimes it goes through a pretty long period for the accumulation cycle where the whales shake out the paper hands, keeping only the diamond hands. Sometimes the accumulation cycle can finish within a few weeks. All right, so it's a huge range, depending on what kind of news that's going to drive liquidity, as well as the positive sentiments, the risk-on mode of people. If you're seeing those news lining up, for me, there are 3 levels. One is the macro, okay? Geopolitical, economic, money printing, interest rates, all that. The second is industry level, meaning for crypto or Web3 altogether. It can be regulation change or broader adoption globally. Okay? And the third level is the project itself, whether it is still doing some good work to get themselves future ready and getting more businesses, more or bigger community on the chain. Okay? So 3 different levels. And that's how these things are going to happen. If all 3 line up, that's when we're going to see another distribution. Be very careful, however. Not every single project are going to be able to return to their previous high. Some may even vanish. So that's the cruel reality of businesses, right? So don't expect the projects that you love may exist forever. Sometimes they just don't. It's unfortunate if nobody or no businesses are going to adopt that particular chain, then there's no reason or no further support for that chain to exist. So you have to keep track of a lot of things in order to make sure your favorite chain is going to continue. Now, big story, let's go to the micro view of Solana. We've seen on and measure the recent price moves. So what the price did was it finally exited the confusing movements right along the resistance or the support, the ceiling of the bigger downtrend. Okay, it finally broke outside of it. So let me adjust this smaller channel to make sure the alignments are correct. Okay, it only changed this state, not the previous one. So what happened if you're new to my sessions? We talked about the first confirmation point, 23rd of March. That's where the bigger box crosses this ascending trend support. And right before that gap, the price shot above the ceiling because there are only two options. Either it breaks the trend or it breaks the support. Okay, it can't do both. But then 3 days later, it dropped below the support line, the uptrend support line. Okay, and that's why it's confusing. Is it just a fake out or is it what, right? And then we continue to track this mini downtrend because of what happened on the 26th of March. And eventually we get to the point where we said, okay, April 8th, we've got a second window where the bigger downtrend, if the price is really coming back to the trend, somewhere when we get close to the 8th, we'll get an answer. And on the 3rd, eventually the 4th, that confirmation came in. Okay, it continued with the trend and broken outside of this mini downtrend as well. So this time, the confirmation comes very, very solid that the downtrend, this long downtrend that started back in September last year, is finally over. Okay? So it is going to evolve into a new trend. As of this moment, the base case is a range bound between the $75 to $101. That's the sideways trend. Okay, if we look at the Wyckoff stage, or even just look at this bigger picture, this is the range. And what we said was, okay, the panic over stage may not have shown up yet because of this kind of volatility and volume. But it doesn't seem to me it is at that point yet. So we need a few more candles and patterns to confirm that this is really the beginning of the accumulation testing period. Let's put it this way. Because this is just the entry point. The PS is the entry point. The actual testing period, I consider that begins with the sign of strength, the selling climax and the automatic rally. That's the start of the shakeout. All right, even though sometimes that may be quick, but that's how I determine that. Right now, I don't see the sign yet. Okay, maybe I miss it in those crazy frequent candles. It happened very quickly over here and then shoop, it showed up. It can happen, but very rarely. So here, we talked about range bound between 75 and 101, the purple and orange. Of course, the red will play a role, the $89. You see, for the entire February, it has been the resistance most of the time. So if the price continues to come up and get rejection from $89, $90, it shouldn't surprise you. Okay? So from 75 up to 89, 90, coming back down, ping pong, like what it did in Feb, and eventually maybe trying to test the 101. That's the base case. But if any kind of news, like I said, the three levels, macro, industry, and the project itself, it may trigger some kind of different duration of price trend change, let's put it this way. Okay, if it's macro, it may last longer. Industry-wide, in just the project itself, the duration may be shorter. So that's how tricky it is if you want to assess it. Next one, NIR. Okay, NIR this week pretty good, 13% climb. However, it's still in the testing period, and the climb hasn't really bring it to solidly go above the $1.4. It's slightly higher, 1.41. It is still within this range, this yellow dashed line over here. This is the resistance set by the previous trading activity near the end of last year, as well as the tariff announcement date. That's very important. And of course, if we look back into the accumulation cycle 2002-2003, that's a level where you see candlestick finding support and resistance as well. So that's where we are. From the volume standpoint, it is higher than the average for this white volume. These guys are a little bit tricky because you see there was actually quite a bit of selling from the top. So these are not as solid as what we see today. Okay? Close to those levels without a long way from the top. So it's a slightly positive sign, even though the tests are continuing. All right. So it is a mid-late stage of accumulation. Sometimes it can last for like over 2 years. But if we come from the PS to where we are now, we are already 430 days in. So a year and almost 3 months. A year and 2.5 months, if you want to be exact. So micro view of NIR. The uptrend is still continuing, even though it's getting resistance over here for 4 days already. Today, the bulls are trying to break above it. Let's see whether they will succeed, given the volume is getting slightly lower and lower. So, again, if it is just a sideways trend, that's going to make the price range bound between somewhere around $1 all the way to $2. Okay, so if you look at this picture, it's basically this range. It hasn't even go back to this panic over stage level yet. So that's the very first point the price or the bulls have to come back to before they can challenge the upper range between the 1.96 all the way to the purple 3.16. Okay, so that's NIR. And SUI. SUI again in the early mid stage of accumulation cycle of Wyckoff, and the paper hands diamond has continued along the key levels of 0.88, the blue key level, all the way up to 1.08, the red key level. It has been there since early February. And it's also around the range where the accumulation cycle happened back in 2024. So at this point in time, we are looking to see the sign of strength coming in, meaning the price coming back to re-challenge the 1.82 or at one point even all the way above 1.93, the blue key level. Okay, sustained price climb re-challenge the trading range shot with higher than average volume. Okay, we're not seeing that yet. The volume actually has been declining over the past 7 weeks. the daily chart. Okay, we were measuring the downtrend, the short downtrend that started mid-March, and we said somewhere around the beginning of April, there is a chance where the ceiling of the downtrend crosses the blue key level of +0.008, and right after that, on the 6th, it was not so concrete, but on the 7th, the bulls make it a clear sign that the downtrend, okay, is over. So we don't have to wait for April 17th. So this sideways trend, 0.88 to 1.08, continues. So that's been the base case. If you look at these two big candlesticks, they kind of gave us some indication. Okay, because when the price dropped to the drops below the 0.88, it got very strong support from the bulls. Likewise over here. Okay, slightly down, closing below, testing around the same level. Wanted to get lower for the bears, but every time it gets to around this range, it finds support. So far, okay? We don't know yet when the new economic data from the US comes out, when the geopolitical environment gets even worse, that's going to be another story. All right, so what can we measure from here then? Given the volume surged and then declined, if this is an uptrend, right? Let's draw a support line over here, assuming that's the uptrend that it is currently going through. What we see over here, we can take this over here because the downtrend is done. So we can use this here as on the 16th, where the line crosses. Okay, here, 0.99 purple key level, uptrend support. Okay, this triangle. The price in the next few days will get into this test. There are only two options, okay? You already know what those are, right? Either it breaks the resistance, continue with the uptrend to go challenge the 1.08 red key level, okay, which it did back in mid-March. Okay, when we get into mid-April, exactly a month, it is going to do it again if it really breaks above the purple. However, if it doesn't, the second option is this trend line doesn't provide sufficient support. Like I said, the volume has been declining. We see these long wicks from the top. There is a chance that this yellow line may not hold. If that's the case, that's going to bring the price come back to re-challenge the support of 0.088, the blue key level. However, one more point is that these long wicks isn't a definite answer. Look at what happened over here. Okay, people have been selling. Volume dropping with a final surge. But it doesn't last long, okay? So it's a bit tricky. This gives us a sign that, okay, it may be time that the rally is over, however small or big it is. But there are still some people going to ride the last tip of the wave before it drops. Okay, so it may indicate steam is starting to run out, but it doesn't mean the price isn't going to go up further. So it's very dynamic, but we can take a look at these dates and gauge it. If it ever continues to climb above the purple, there's one more date over here that it has to confirm either one of those two options. In the week right after the first challenge, that's the second challenge. Interesting, yeah? So, I'm trying to look at this. It doesn't look to me is a parallel line, okay? Because one can argue, is it like a more gradual downtrend instead of this steep decline. If you want to draw it, if you line this up and line this up, this is not parallel, basically. It's a widening gap. Okay? That's why we have to check and confirm whether we have missed something visually. Okay, can we draw parallels? Which, if we draw to this line, it looks like it is getting closer, but we miss all these points over here, so no point to draw that. If you're interested to access these sessions 2 days earlier, similar to the channel members, join them now. And remember, the Substack dashboards are available for free. Thank you, and see you in the next video. Ciao.